That means we are live here on YouTube. Tackle Trading's halftime report. We got a full crew here today. Markets are down, which means I expect a few more eyeballs to hit this video here, Matt. It seems like we get a spike in attendance whenever the markets are selling. I wonder why that is. Welcome out, everybody. Halftime crew. And Matt, how you doing this morning?
You know, Tim, I'm doing really good. I'm excited to be here with the halftime crew and to navigate a choppy day in the market.
Yeah. I mean, on the bigger picture, if you pull back, I mean, the markets are neutral in a long-term range, but that was a significant break here. We were holding against old resistance, new support. Tackle Trading had moved their ranking down into the neutrality move, Matt, to a positive 45. It is almost guaranteed that it's not going to be a positive 45 by the time we come on Friday. There's two more
No,
trading days.
but Tim, it's not going to be bearish either.
It's going to be somewhere in that neutral
It's good.
range.
It'll probably be negative 40, negative 45. I'd say that. But you know, obviously the market is spun a little bit out of control for the buyer side, for the bull side. Obviously not for the bear side. Some of those bearish trades have been really, really, really powerful. And you know, it's on days like this, Tim, where I'm just reminded that every portfolio needs some bearish trades,
Yeah.
right? It's what we've talked about in the past, and we've talked about it just recently here about delta weighting a portfolio. And you know, Tim, you've talked about this quite a bit about keeping, you know, theta positive with the delta neutral type rating, and maybe even move that into a little bit of a negative rating from a delta perspective. But as a trader, you got to show up and do your job as a trader, and you got to assess the price action. And you know, as what we were talking about yesterday, as that market was, you know, kind of showing the bearish tendencies off that PMI reading. Where did it come into? Well, it came into that, you know, 2950 level. And you know, I remember talking yesterday on the halftime report how, you know, you're doing a little bit of a bear flag pattern here. But once that broke that support level on the intraday, Tim, it just continuation of the sell off from yesterday. It's really not new news today. It's really a continuation of the previous news. Just yesterday, that PMI number yesterday was it confirmed what we've been talking about over the last year, Tim, about how the European economic data and the Asian economic data, how for the first time in the last 30 years, it's the international markets really kind of spilling into the US markets, whereas most recessions in around the world in the last, say, 50 years, it's the US kind of bleeding into the rest of the world. But that's not the case this time. We're seeing European data, Asian data, and we've been seeing this for a year now. And just yesterday was that confirmation that that was spilling over into the US. And so today, I just feel like today is just a continuation of the people that woke up and saw the headlines yesterday and is like, oh, this is kind of bad, and now they're just continuing the selling today.
Yeah, there's a lesson there. There's no doubt about it, because we have a 24-hour market cycle, and economics in Europe and China and Asia, it does impact the US, and economics in the US impact them. And so when they came in and sold overnight, Matt, now the market's coming out in the US and we're opening up down.
Mm-hmm.
You're right. It's not bearish in the bigger picture regard. We still have major support at 2,800.
It's
You know,
neutral, Tim.
you're only
It's
3% from that major support. We're neutral. There's
let's break this down from a technical perspective, right? Let's remove the economics from it. Let's just break this down from a pure technical perspective. When you're looking at, and Noah talked about this yesterday, how the market was kind of double topping here at 3030. You have the double top there. And then when you're looking at kind of, once you create that double top and you can't break it, you got to offset the bullish behavior at that point. You have to offset the bullish behavior. You had the slowing momentum, the double top situation. Now you're in some degree of neutrality, as we talked about it with the newsletter over the course of the last couple weeks. Moved it down into the positive 40, moved it down into the positive 45, and we'll move it down most likely into the negative 45, just depending on what we see throughout the rest of the week. But when you're looking at that double top scenario, you got to now look at where is this market going to find that support level. And you have two different areas of support that you can really kind of focus on. You can focus on what is known as horizontal support, and horizontal support is your pivot points. And so you have these pivot points right here at about 2,800. Obviously, you're ticking right now at 2,881. So that next horizontal support level goes all the way back over here, Tim. You have horizontal support right there at about 2820 by 2,800. So that's the level of support that you're looking for right now. But you also have an interesting trend line that I was looking at on the 4-hour chart here. When you're looking at this trend line, I'm connecting this support pivot to this support pivot throughout these support pivots right there. And you have that interesting vertical trend line that is also happening that could play a role in this market finding support as well. Obviously, as from the buy side mechanics, Tim, you're not looking to catch what this is obviously a falling knife at this point. You're waiting for that to kind of find that support level from a buyer's perspective. From the bear's perspective, obviously they're celebrating on a day like today.
Oh yeah, there's no doubt about it. I mean, if you're bearish delta, you're playing the downside, you've got that positioned in your portfolio, or if you're long gold, you're happy because gold's popping again. We'll get all of that analysis as we go here.
Well,
But markets
can
are
I
down,
say
Matt.
one thing?
Mm-hmm.
You know, we were talking on the pre-production, you know, before we got live in the halftime report, and Cody's like, well, on a day like today, you know, what are we going to talk about? And Tim, and you said something. You said, I'm a trader. I'm going to go through my routine. I'm going to go through the markets. I'm going to go through the commodities. I'm going to go through the currencies. I'm going to do my job as a trader. I'm going to put my butt in that seat and I'm going to do my job. And that's what we do in the halftime report every day. We put our butts in the seat and we do our job. Our job is to analyze the market and always trade in the direction of the overwhelming market.
One of the implicit messages from the halftime show and doing a daily routine is that it doesn't matter if the market's neutral, bullish, or bearish, you have the same process, you know, and that's your job. There's no question about it. If you're a veteran, you know that. And if you're a beginner, you're learning that. And by the way, I am reminded through my own checklist to always pitch and promote here early, Matt, because we come and do these halftime shows for free on YouTube to build our audience and our community. And if you're out there and you are a veteran trader and you're new to our channel, give me a subscribe. You know, we'd love to have you joining us on a daily basis. Give me a thumbs up if you're one of my Team Tackle halftime crew. And if you're not in our pro membership, Cody will always be dropping the link to our 15-day trial at Tackle Trading, where you get hours of different content each and every day that you can dive into and get some help with as you're learning your trading accounts. Matt, S&P, NASDAQ, Dow, they're all looking very similar.
And I'll say, Tim, when I'm looking at this on a weekly chart here, it really looks like an M formation. This looks like the worst technical situation I've seen since really kind of, I would say 2011. I'd say 2011 from a weekly perspective, right? And that maybe 2015 we spun out of control a little bit.
I was about to say, I was like 15 looked pretty in line.
15 we spun out of control a little bit during the summer months there, especially coming into August. But this is it. But let's take a look back last October, right? There was not a technical pattern here on the weekly chart last October. That was just a sell-off. This looks like a pure M formation, slowing momentum. And when you're going through, you know, long-term market reversal patterns, there's actually 5 steps to the reversal, Tim. You have slowing momentum. Obviously you have the big upward movement. You have a smaller upward movement. That's slowing momentum. Number 2 is the double top. Obviously you had the double top 3 weeks ago. Number 3 is the double bottom. The double bottom has not happened yet because you're still above that 2,800 level. But Tim, when I'm teaching technical formations, major market reversals, you know, those types of scenarios, I always tell people it's within the M formation, not after the M formation, that you buy insurance. And so people, if for the people that are in Bear Market Survival Guide, they're probably already buying insurance to make sure their long-term portfolio is protected.
Yeah. Pull back on the monthly chart for 1 second, because I do think slowing momentum is definitely a signal, but also chart patterns are significant as well. I'm seeing a rising wedge. You know, I know on the daily we're neutral. On the weekly, we've got some concern. We've got a long-term uptrend still intact. There's no doubt about it. You have the volatility from last year, but in the grand scheme of things, are we just kind of slowing down up here, Matt?
On the monthly chart, absolutely. I mean that's what the monthly chart does. When you start to see that M formation on the weekly chart, you see slowing momentum on the monthly chart. So yeah, I mean it gives you a different perspective, no doubt about that. And I'm certainly not calling for a major market reversal at this point. That's why we show up on a daily basis and we trade the technical price action. But wouldn't you say, based on what you're seeing in these charts, that it's in the cards? That there's a probability factor here?
Well, yeah. And I think one of the biggest concerns I have, Matt, is a banking system stagflation type of scenario, where if we do have this economic problem kind of persist and accelerate.
You don't think the repos from the last 2 weeks have an impact here?
Oh,
right. Of course they do.
Yeah, they do. Hey, I also want to say, guys, I dropped in the chat a really fantastic article that Matt wrote a while back on the art of the reversal. Still very relevant. That's a timeless piece, and I'll drop that thing anytime we talk about reversals, because Matt, you did a fantastic job on that.
Thank you. Appreciate it.
And welcome back, Mr. Fidget 68. Even if you take a break from the halftime crew, if you go on vacation or you got life come up, always come back and join us whenever
We're
you
always
guys
here for you, Mr.
analysis.
Fidget.
There's no doubt about it. Top news headlines. Obviously, the markets are down. There's not a lot of economic data today that is driving it, Matt. It's a spillover from yesterday, like you mentioned. Crude oil inventories did build up, and crude is down. We'll get to that here in just a minute. Give me a quick flash through the Dow, the S&P, the NASDAQ. We already looked at the S&P, but then end on the Russell, Matt, because the Russell is still holding support. And I know a lot of traders are neutral. Trade the cash flow condor system, and kind of just give me a quick analysis on those three, if you will.
On the three major market indexes, the Dow, the S&P, and the NASDAQ, they're all looking very, very similar. I mean, there might be a slight difference from a technical perspective, but you have your double top, you're clipping support on the Dow. When you're looking at the NASDAQ here, you have your double top, you're clipping that horizontal support, you're underneath your moving averages. So you have a very similar technical read on all the three major market indexes. And then you have the Russell 2000, which is RTY if you're looking at the futures. And it's the last 2 days has been, it's been a bloodbath in the marketplace. There's no doubt about that. But wake me when the Russell breaks support. You know what I mean?
I agree.
Yeah. Like there's not a lot of aggressive management to do on that condor system yet. Maybe when the market breaks support, but if people are applying the condor system the way it should be applied, those contracts aren't threatened until most likely somewhere around 1350.
It at the depends. Top. It depends on where you set your delta. One mistake I see a lot of traders who trade condors make, Matt, is they go to the 10 delta instead of lower when they can still get the credit they're looking for. So like they would have done a 10 delta at 1350 instead of a 5 delta at 1250 or something like that, for example. When as long as you can get a 10% ROI, the further you have the cushion, it's better.
Well, and that's the thing about increasing volatility though, right?
Yep.
With increasing volatility, those option prices are a little higher, which means in an increasing volatility condition, you can adjust the delta to a lower number to get the same degree of credit, right? That's when you, like in a normal volatility condition, you sell a 10 delta on that contract, just given the fact that you can get the credit you want with the 10 delta contract. But in an increasing volatile condition, you can sell a 5 delta contract, get the same degree of credit that you can sell on a 10 delta contract, but you got a lot more cushion. And we've pulled up that theta research spreadsheet before, and a lot of times when people are filling out that theta research spreadsheet, they're fixated on the ROI column. They're fixated on the ROID column, but the column that is one of the most important columns in that spreadsheet is the ATR buffer. That is as important as anything else, is the range you have on the strike price you're selling versus the current price action. And so what I would recommend for a lot of people that trade that cash flow condor system, or credit spreads in general, bull puts, bear calls, iron condors, naked puts, you name it, don't just fixate on the ROI. You can always get an ROI in a credit spread. You can always get it, right? But focus also on the ATR range you have. Because sometimes when you sell a 10 delta contract, you look at that and you're like, oh, I have 90% probability. Well, maybe not. There's a probability of touch you have to take into equation. But what if that ATR buffer, Tim, is 2.5 on a 10 delta on one contract, but in a different environment, that 10 delta is 4.5 on the ATR buffer.
You're gonna like the 4.5 buffer.
Obviously, you want range on a system like you do on credit spreads. And this is not just for cash flow condors. Cash flow condors, bull puts, bear calls, naked puts, short strangles, any type of cash flow type system outside of covered calls, you have to take a look at the HR range.
That tackle theta spreadsheet, by the way, somebody in the chat, just type in tackle theta spreadsheet. It's one of my favorite tools that we've developed over the years, Matt. It's for mentorship, quite frankly.
Well, it is, but I still use it.
I use it all the time. And Mark, actually the last few weeks in our cash flow club on Thursday evenings, we've had the coaches go through and teach how to use that spreadsheet. So if you're a pro member, go catch those recordings. If you're not attending the cash flow club live, make sure you go and identify what Matt's talking about. And the essence of it is this: don't go for more money just because the flashy, shiny money is a bigger.
That's new traders. That's new traders. Veteran traders sell lower deltas, take less cash flow for higher probability and more range.
Yep. Dollar and then commodities, Matt. Let's keep working through the markets here one step at a time. The US dollar obviously has been bullish for some time, hit the top of the range, started coming down. Kind of a doji day today, not much here. I'm still slightly bullish. The trend is intact. Anything to add to that?
No, I mean, it's forming a little bit of a high base type situation right now with the dollar. You certainly could see that retrace further. I wouldn't look to be buying anything on the dollar until we see a little bit of a deeper retracement or more consolidation with the potential on a breakout. But from a dollar perspective, on the actual index here, you are finding some pretty significant level of support right there at about 99. So keep an eye on that at 99. Like I said, I'm not looking at touching the dollar here at the top end of the range. I would like a deeper pullback coming back down into this trend line that we've been talking about, maybe those moving averages as well. As you can see, that rising 20 and that rising 50 here, every time that dollar gets in between those two rising moving averages, which is typically called the bull zone, that's where you're looking to be a buyer on the dollar at this point.
That's right. And by the way, if you're out there watching our show right now, give me a thumbs up here on our YouTube channel. Helps our analytics and all the ways that Google has created YouTube. And if you're a brand new trader, a noob, a beginner, if you're a greenhorn, whatever you want to call it, let us know in the chat that you're new and that you're here at our channel for the first time. We love beginners.
There's nothing wrong with being new.
We love beginners.
We were all new at one point, right? And we all went through the pain of the market teaching us some very valuable lessons. But the difference between a new trader and a veteran trader is veteran traders don't give up. We realize that that's part of learning this business, and we just keep on learning. And if you're like in this environment, let's say you're trading a lot of condors, right? And that's your system, right? That you're just trading condors, and you have condors on Google and Amazon and Facebook and Apple, and that's your thing. You're the condor queen, you're the condor king. Well, that's fine, but in this environment, realize that you have some diversification issues there, because even though you might be delta neutral and theta positive, you have condors on everything, which means you have no diversification. Go pick you up a little boring utility stock to offset some of that risk.
Jimbo's my man here, Matt. I'm just going to ask you a question. He says veteran traders don't give up. Hashtag DFQ. Well, what do you think that stands for?
I don't even know. And I do know Jimbo, so I don't know if I want to ask. But I will tell you this, guys. It just goes back to finding success in anything. Finding success in business, finding success in real estate, finding success as a trader, finding success as an investor. What was the number one thing that Napoleon Hill found that created success long-term for the most successful people?
Mindset.
Those 13 qualities, it wasn't just every one of those are mindset.
Sure.
But the number one was they felt. And right after their failure, they found their greatest success.
I loved that book until the very end, by the way.
Well, that's because it's chauvinistic, but
the end gets a little weird.
The end, yeah. It was 1937. Come on. I mean, it was a little chauvinistic, but it's still one of the greatest books of all time. And one of every other mindset book that's been written in the last 100 years is somewhat based on that book.
Yeah, it's the father of all of them.
Failure leads to success. And so in these environments, if a 2% drop in the S&P is causing you some degree of anguish, there's something wrong in your trading plan. There's something wrong in your design of your portfolio. And instead of giving up, let's figure out what the problem is, fix the problem so that we don't have to do that in the future.
Mark, you run operations for Tackle Trading, and you know what Matt just said to be so very, very true. We deal with beginners. We deal with veterans. We're here as a trading community to help people grow. We're doing a pretty damn good job of it as well. But Mark, I want you to kind of go on that thought for a minute here, because what Matt just said, I think, is the lesson today. If a 2% move in the market has got you all your panties in a bunch, you've done something wrong, right?
Well, let me rephrase real quick, and then you two can talk.
I didn't hear Matt say panties in a bunch.
I did say that, but I will say
I don't think I've ever heard Matt say panties in a bunch.
I've never said
I've heard Tim say that about 4,000 times.
I don't even know what that means. I don't know that saying, but it's going to be more than 2%. Now go.
Is it down more too now?
It's selling off. I mean, it's going to continue to sell off until it finds support. And like I said, you do have that vertical support line right there at 2860. So I'm keeping an eye on that.
Mark, you're our wisdom here. You're our sage. You're the veteran, just like me and Matt. You've been here. Go with the thought here. What is the message about volatility and also risk control, position sizing that everybody out there needs to hear?
Most traders in their arc of their trading existence. If they succeed, now, a lot of traders fell for some of the things I'm about to say. It's one continual learning journey. I've seen doing the Traders Lounge where I get to interact with a lot of students since we started 2 years ago. Students that have been around a while, they've learned the lessons that today is teaching long time ago, maybe through their own mistakes, maybe through listening to the mistakes of others. That's the beauty that we have as a community, is that we have this collective wisdom, this collective knowledge that we continually share. So sometimes students learn those from other people's mistakes, but you learn along the way or you get beat out. What happens in the early parts of that journey, when you're first doing a particular strategy or you're first particular learning to trade, you're not prepared for all of the situations. This is, as Matt has said, wake me up when it breaks support. I mean, right now we're just trading within the broader range on the SPY, on the Russell. This isn't anything unusual. In fact, this isn't unusual in this year. So, I mean, what today is just a day that you see a lot in the market. It's nothing special about it. You've seen it many, many times before. But new traders oftentimes haven't, especially if you're in those first few trades or those first few dozen trades. And they quickly learn, oh, wow, I was not prepared for this. I hadn't thought this one through, and that's okay.
I agree.
It's very normal to not have thought through things that you haven't experienced before or don't have a lot of experience.
You know, the worst reaction to market volatility is actually giving up on trading or not actually pursuing that next step of education. I've seen it before, Matt. Trading, when you understand it, you'll do it for the rest of your life. It's going to be a part of the way that you approach finance and banking and everything that you do. Because all trading really is where you're using the assets that you've accumulated through the financial markets. So don't let volatility shake you out no matter what. I know it's not a big day today, Matt, but we're moving into October and all the headlines are going to be scary. I know it.
I just want to say this. I don't hope for a recession. I don't want that. I don't hope for a bear market. I don't want that. But you're going to be damn right that I'm going to drill that market when it does happen. And there's going to be so much significant opportunity for Team Tackle on the downside. And we truly do see that bear market.
Yeah.
A 2% down day in the market is not a bear market. A double top in the market is not a bear market. A double bottom in the market is not a bear market. A bear market happens when you clip weekly support levels. That's when it happens. It doesn't happen on daily charts. It happens on weekly charts. And so if today spooks you a little bit, don't allow that to, because this is an opportunity of a lifetime, in my opinion. Guys, I look back to 08 and the $6 trillion that exchanged hands in 08. $6 trillion on a 50% clip in the S&P 500. If the S&P 500 clips another 50% in the next bear market, and yes, there will always be a next bear market, but let's say it clips that. Guys, you're not talking $6 trillion exchanging hands. You're talking upwards of $13 trillion exchanging hands in what will become the biggest shift in financial wealth in this nation's history. And so instead of getting concerned about a one-day movement in the market, get excited for the long term. And we were talking on the podcast just this week. My biggest frustration with new traders is they never realize the long term because they get so caught up in the short term. Well, let's not get so caught up in the short term. Trades are going to happen. You're going to win some, you're going to lose some, right? It's going to happen. But get excited for the next year, for the next 2 years, because if this market truly does spin out of control, we're going to be with you guys every single day, navigating this market about how to play it. And that's powerful in this community.
Well, and there's a lesson right here in the chat as well, Matt. One of our students, one of our loyal halftime crew members, Justin, says, after trading through 2018, I've become numb to these huge sell-offs.
Yeah.
And I know Justin's journey. I mean, he took the bear market survival guide course last year. He's constantly back testing his systems. He came out and did mentorship. I mean, that's what education and routine and process and experience can all build for you right there. And that's why we say
another day in the market. That's all it is.
Trust the process. Crude oil, natural gas, Matt, I got to take a peek at these two because they are not doing well for me right now. I've got some cushion on both of them.
You got some cushion.
Man, the second I open my Yap and start talking about nat gas, it goes straight down. Crude oil down here at support until it breaks 50. There's nothing for me here.
No, but if it does break 50, you have to do something.
That's right. We'll talk about it on the podcast, Mark. I'm sure we'll have a discussion about this one. Mark, anything to add on crude? I know you do our commodity report each and every week at Tackle Trading. So what's your take?
Well, this is when I get excited. Like when it was up at the top of the range, I mean, I have zero interest. This is when I start getting really, really interested in acquiring crude. We're coming down to the bottom of the range. And now for me, this is when I break out the lesson of what is your stable, and that this is the phrase I use to describe it. Some people might use reversal, but for me, it's what is your stabilization signal? Obviously, as it's free falling through short-term support, you don't go out and do a bullish strategy. You don't go out and buy, you don't go sell a put, you don't do that. As it's every day breaking intraday support, breaking day, we don't, the phrase that traders as a whole use is we don't catch that falling knife.
Mm-hmm.
And so what is your stabilization signal? Do you get really aggressive and wait for 3-4 days? Are you more conservative and wait for a couple weeks of that support level holding? Do you wait for it to come back up and cross a short-term falling moving average like the 9 or the 20? Every trader will have different things. But this is when I get really excited. We have a major support area. So something could happen. Now, I'm not going to go do it today because once again, intraday support is breaking every day. Huge bearish signals. But I start getting excited about looking at a pattern developing here, waiting for support to be confirmed and then confirmed again, tested a few times by the bears and have them fall, and then get that higher high, breaking short-term resistance, crossing a move, whatever that is your reversal signal. And we talk about a lot of those with pro members. But this is when I start getting excited.
Well, I have a different take on this completely. I don't want to go off on a crude oil debate here, but the reality is waiting for a delta signal on a product that I invest in and cash flow on, I don't need a delta signal, Matt. For me, the way that I use the product, I understand.
Okay, so there's not really a debate because you're talking about a completely different system. Mark's talking about picking up shares of USO. Correct, Mark?
That's right.
Yeah, I mean, no.
Or selling a put option on USO. Something along
this is for adding to or starting a cash flow long-term investment on a commodity.
Right.
Yeah, that's a different analysis completely than I'm looking to sell credit spreads. Because if you're looking to sell a credit spread on crude oil, you're not going to do that as it's coming down. You're going to wait for the double bottom and all that stuff.
Oh, selling a credit spread is weeks away.
Yeah.
Weeks away.
Well, what if I'm already in one?
Well, then
that's a different analysis as well.
And then my question: when did you enter?
I entered
the same one, Tim.
A few weeks ago.
I'm in the same one. You're in 46, 45?
When it market gapped out, it backfilled and it was sitting on support. It had a little doji confirmation, and I put in a 46 credit spread. So
yeah, I did 47. So I'm not. Don't get me wrong. Nobody wants to lose money, but you're not going to panic. You have range. That's why you sell credits.
I'm not overthinking it. If it broke below 50, I'm going to hedge it. I'm going to get out of it. I'll even take the hit if I have to.
If it breaks 50, you might just short USO to offset the risk.
Do you ever feel like sometimes the market's just messing with you?
All the time?
Natural gas I haven't touched in a year. I finally stuck my toe in the water with a very small position. Nothing's going to get me all excited or worked up. And the very second I did it, with all kinds of cushion in my mind, all the way down at the 2 strike, the 2 190 bull put spread in the futures market, Mark, it literally has gone down 6 days in a row. So c'est la vie, or 5 days in a row.
Are you kind of feeling like that hedge fund that went up belly up by selling naked calls?
God, I need to go look at that video again and remind myself of what can happen with natural gas.
In the commodities report this weekend, I said, I'm very interested in entering a natural gas position for the first time. But I was waiting for, once again, some sort of stabilization signal. Like you have to at least, at a minimum, have like a higher high on, like some kind of short-term. All you've had is short-term support break, short-term resistance that have formed on short-term charts. They haven't even came close to being broke. So there hasn't been a trading signal the way I use in natural gas in weeks.
Yeah.
I'm excited about natural gas, but you don't ignore your knowledge of technical analysis.
This is a very polite way for Mark to say, Tim, you should have read the weekly candlestick chart instead of the daily candlestick chart. Because on the daily mark, I had the green doji candlesticks coming in here last week.
And you're using, and my argument is that you are using a short-term directional trading signal to enter in a position that does not align with the signal you're using.
It's not, I can't criticize that.
No,
that's good. That's good analysis.
I agree.
I mean, it's just another reminder, because I did it on crude too, the same way you did on crude and natural gas. I haven't done it on natty gas yet, but you should always take a look at that weekly chart to get secondary.
I mean, back up 6 days. So it's coming down to the 20, takes a couple days support. Now, if I were doing a directional play above the high and it then breaks support, that's fine. That's a proper trade signal. I take, as soon as support breaks, I take a small loss, no big deal. But if we're doing a longer term trade or kind of a positiony type trade, you know, you need a little bit more confirmation there.
Yeah, that intraday step confirmation. As I was getting on a plane, Matt, I'll blame the plane. I don't know. No, you take accountability.
You can't blame the plane.
I've got a position size. I've got a stop loss. I know what I'm doing. It's
you got
fine.
220. You got 220 by 202. You got support here.
And once again, I'm excited. I mean, I'm excited. The only thing I'm mad about today is that gold quickly reversed and I didn't get to add any gold.
Gold's back up.
Like I was hoping gold would fall down because that's my go-to commodity. That's the thing that I love the fundamentals on.
Yeah, I missed out on, I got out of that silver transaction. I was looking for something on the weekly chart. So I took the loss on the silver trade and I was waiting for that weekly confirmation, which I'm still waiting on. Still think it can dip a little bit further. So I'm not re-triggering into gold or silver here. I'm being patient here.
Yeah, I would be patient as well. Obviously, gold's going to go up on a day where the market's down like this. Most likely that inverse correlation will hold, and back up of 1500 is significant in my opinion. We'll see if it can hold and carry some momentum through the week. Couple comments in the chat as we kind of wrap up this section, go into our game here in a minute. Julia, I may be new, but waking up to half my BTC orders, buy to close orders, locking in profit on my covered calls made me smile. Should make you smile, Julia. That's automation right there. Love it. Emily, love the back testing from Jessica. We love that as well. A lot of good stuff coming in here. And Bob, I don't know what video you're referring to. I might have already moved past the conversation.
I think it was the one where the guy put in the order and he was screaming as it was closing.
Oh no, I'm not going to put Bob through the pay. I'm not doing it. I'm not doing it. It was last year, Matt. You know what I'm talking about?
Which one?
It was the optionsellers.com who blew up his account and capitulated. And when he came, he did a video that's on YouTube somewhere. Bob, if you want to be reminded why you don't ever over leverage or sell naked options
go watch a hedge fund blow up $200 million.
Optionsellers.com last year, the guy had to come out and talk about his fund going under, and it's painful to watch. In fact, I made a student.
And they were primarily selling naked puts on natural gas.
Naked calls.
They were selling naked calls.
Naked calls on natural gas, completely over leveraging themselves. And natural gas went from $2 to $5. And it basically, that's what people don't understand about futures. And that's why, unless you're the pro, you should not trade futures. We analyze the futures, but like Mark, I'll analyze /GC, but we'll trade GDX or GLD, right?
Yep.
We'll analyze crude oil on the future so that we can see the 24-hour marketplace, but we'll go trade USO, right? We'll analyze natural gas on the futures, but a lot of people will go trade UNG, the ETF version of it. So in terms of that video that you were referencing, it was basically they were selling naked calls, completely over leveraging themselves, and they blew up $200 million by over leveraging themselves on one product. And I didn't feel bad for the guy because that's insane. That is just insane.
As a human, you feel.
No, I don't.
I do.
No, I don't.
I'm actually more.
The money went. The money had to go somewhere.
His money. He was using other people's money to over leverage like that. Like what?
No, they were playing with fire with other people's money. I don't feel bad for that.
Well, actually,
I feel bad for the people.
Yeah.
Right. But when you give somebody else your money, you have that risk.
That's right. Learn how to manage your own money.
That's why tackle trading. That's why people manage their own money.
You have your
Okay?
own
Have
accountability.
control.
That's right. 100%.
Take responsibility.
100%. One more comment in the chat here. Tom Lamb says, newbie to trading, finally been a trader with live trade for 3 weeks and 100% trained by tackle trading. Glad to have this community. And if you want to be like Tom, new and trained,
Tom,
there's
I know what that comment is coming from, Tom, and I appreciate that, my friend.
Yeah,
I really appreciate that. Tom, you're awesome.
That's awesome. All right, let's keep working through our process here, Cody. You know, the market's gold is back up, silver's back up. We've looked at metals, we've looked at all those things. Cryptocurrency, who cares today? It's in the 8,000s on Bitcoin. Nothing's really going on. Not much to see there. We could bring up the VIX, but we won't.
Today? I thought we just
There's nothing.
I know.
Bitcoin is not a daily
I've been saying,
routine
who cares
item.
for months.
One thing, Tim, one thing to keep an eye on. The indexes are forming that reversal. Communications, look at that M formation.
Yeah.
It's already found that support. I do think the next couple of days in the market's going to be very important from a technical perspective.
I'll throw down the ace of spades here and trump card you though. Healthcare is uglier.
Oh, healthcare is even.
I
uglier.
wrote down the sector bull and bear list, and I got to tell you, I am so concerned about that wedge breaking on healthcare, and the daily chart is breaking and penetrating support.
Yeah. Well, we talked about that yesterday. Healthcare it's one of the most aggressive spots in the entire market, and just to further my argument that healthcare is not defensive at all. Healthcare stocks have, at least last year, I haven't checked this year, but as of last year, they had the highest PE ratio collectively of any sector in the market.
You know, Ameritrade AMTD real quick here, Matt, before we get into the game, I do want to talk about one stock in the news.
Oh yeah. Hey, TD Ameritrade traders. There you go, buddy.
We blasted Ameritrade yesterday, and Cody,
Let's
they
take
came
credit
out.
for it. Let's take credit.
Yeah.
Hashtag team tackle.
I take credit for that. Yeah.
Let's take credit for that.
They cut their commissions.
0.
Is it 0? Because I heard
here it
some
is.
mixed
It's
information.
0 on stock trades, equity trades, 0 on ETFs. It's 0 commission on option trades, but it is 65 cents a contract. But there is, and this is one of the things that a lot of people hated about TD Ameritrade. They had one of the larger assignment fees, right?
Yeah.
No assignment fee. They are going cheap across the board, 65 cents a contract. And yesterday I was thinking about leaving TD Ameritrade to go to, because if I can pay 0 commissions with Interactive Brokers, yeah, I'll do my analysis with Thinkorswim, but I'll go trade with Interactive.
You got to run a
Brokers, right?
business for sure.
Right.
Yeah.
But with TD doing that, man, fantastic. I don't like you, TD Ameritrade, but I do love Thinkorswim. So with that said, I'm sticking with Thinkorswim.
Yeah. It's pretty
And I believe,
incredible.
Mark, you trade with Interactive Brokers, correct?
I do.
And you're thinking about switching over to TOS, correct?
Yeah, this TOS's platform's the best platform.
Well, that's the only reason why we're with TD is because TOS.
That's right.
Well, I actually left TOS because of their commissions back when. I might be coming back.
Oh, so you're leaving Tasty?
Maybe. I don't know. I really like Tasty though.
Yeah,
I do like Tasty.
Tasty was already cheap on commissions.
Oh yeah. I was in dimes for a long time.
Yeah, and it's set to go in motion tomorrow. So all you hashtag team tackle, make sure your commissions are in line with what they said. And and I said on Twitter in response,
I'm taking
they had to do
Starbucks
this.
gift certificates as gifts for all those people for all the money you're saving on commissions. So if you have all this extra money from commissions you don't know what to do with, I like Starbucks, but I'm too cheap to buy it.
You're such a prostitute.
Dude,
so
I could see Mark, being all hard all the time, but he's actually a pumpkin spice latte guy. I can see that.
I guarantee.
Hold on, Mark. Hold on. I want to ask the class. I want to ask the team tackle.
What
do you think is Mark's drink?
I buy the same thing at Starbucks every time.
He's got to be
every time without exception. It is absolutely my drink without exception.
Yeah, he's a caramel macchiato guy and a sex on the beach. That's what
an ice caramel macchiato guy.
I knew it.
An ice caramel macchiato.
No, Lewis, that's not Mark. I'm black coffee.
Yeah.
Okay? Tim's black coffee. Mark, Cody's black coffee. Mark is, how much sugar can you put in that coffee?
It is delicious.
Pretty much.
It is heaven. I don't care if it's 10 degrees below to 0. When I go to Starbucks, I get an iced caramel
I'm not going to
macchiato.
make fun of you that much because I do enjoy
It's delicious.
every now and then I do enjoy a nice little iced caramel macchiato.
All right, guys. Well, if we're going to get to our segment, I'm going to have to pull you guys away at some point in time. So today's segment's really just a discussion, kind of one of a game we've all played before. Really fun. No winners here. We're just going to play. We're going to do Would You Rather. So I'm going to start off with one that I believe we talked about a lot before, but I feel like it's a good transition with what happened today. So this is for all of you guys, and also any students. I encourage you guys to add to the chat your answer for Would You Rather.
Would you rather? I like it.
Would you rather be the greatest master technician, but not know how to properly position size, or be a complete rookie again, but your position sizing is perfect?
It's easy. It's number two.
It's number two.
It's not a debate. Okay. So you don't even have
It's
to
number
be
one for me because I'm the best. So I don't care if I'm broke. I'm the best at something in the world.
You'll be broke.
So I'll be broke.
It doesn't matter as long as
Doesn't
Mark
matter.
can say he's the best. No, it does. Mark could be Jesse Livermore. It doesn't matter. He was the best, even though he
I don't give
broke.
like one thing about me. I don't give two shits about money. I don't.
He doesn't.
I don't. But what I care
That's
about
interesting.
is process and perfection.
Sure.
Mhm.
So
And the money does come as a result of that.
and
though,
I enjoy
brother.
trading and I enjoy the things I do.
Well,
You know,
being
and-
a master technician, you may have wild swings.
No,
You can
if
go
you're
from
the
being
master-
rich to broke, rich to broke, rich
If-
to broke.
Okay, and let me
If you
rephrase.
have bad position sizing,
Oh
it
yeah,
does not matter what your
It doesn't take
technical
long at all.
skill
You're
set
broke.
is.
You're
done.
broke.
And I don't care about money
We'll load
because
that
I
account
have a
up.
very comfortable life, but I don't obsess about money is probably the best. You know, if
Yeah.
I didn't have money to provide for my kids' future and that, then all of a sudden I'd be obsessing about money a lot more. But
No, exactly. Nobody
And
cares.
the
about
lesson
it
there
until they don't
is
have
that-
it. So
All
Don't
right,
worry
so
about being a
I think
rookie
we're
until-
all agreeing, outside of Mark's sarcasm to a certain degree, that position sizing is more important than the technical skill set.
All right, I got another one for you. Would you rather have to buy every IPO that comes out,
Oh God.
or not be allowed to touch any IPO for 10 years? Like that company IPO'd and you have to wait 10 years to ever trade that company.
Okay, are we playing the proper would you rather where Tim and Mark guess what I would say?
well, that's locked in. Cody doesn't know locked in. We got to educate
Yeah, I haven't
educate
played-
this
I haven't played
kid.
locked in. This
At
is
some, at some
this
point.
is,
Right.
this is just
Okay,
a
all right. So
discussion.
would you rather have to buy every IPO?
I don't need
would-
IPOs. I'm
No,
good.
I'll wait 10 years.
I love the
cash
idea
flow.
of catching a new company, Yeti. I'm excited about when it starts going back up.
You
There's
know
a
what I'm
bunch of
excited
tech
about?
stocks.
I'd love trading Disney though.
Yeah,
I
I
love
don't need.
trading Apple and Microsoft.
I don't
and
need an IPO.
Amazon and Google. Nope.
Last time I checked,
IPOs are
GE's
garbage.
GE's been in business for over 100 years, and it's down like 10%
Hey, and
the
can we
last 2
just
days.
publicly say thank God the Wii company killed their IPO because they were going to
Yes,
kill a lot of
they-
people's money. And
they
thank
would've.
God it was only SoftBank that's going to lose billions and billions instead of consumer money. That Wii company, what a garbage company. Absolute garbage company. And you're going to force me to buy that shitty IPO? No, I'll wait 10 years.
Well, each of these would you rathers are kind of based around a couple different trading rules that we talked about anyway. So that one's the FOMO. Don't have FOMO. Miss out if those companies could make gains or whatever. Don't worry about it. Go trade something else. So
Just go
first one
take a
off,
look at
position.
Microsoft in the 80s, 90s, 2000s to 2010s. If you waited even 30 years to invest in Microsoft, but you invest in
So good.
Microsoft in 2010, we'll say, you're up 400%, 500%. I don't even know what it is. No,
Yeah.
Give me a quality company. It makes me just feel ill if I have to buy an IPO.
These are softballs, Cody.
Oh, come on.
You
Okay.
are throwing big fat pitches right over the middle as slow as you can. So that
Would
we
you
can-
rather?
give me something tough.
Would you rather only be allowed to set trades when the market's closed, or lose your ability to set bracket orders?
So let me
Market
try to
closed, I
follow.
can trade futures and Forex.
Yeah, but options equity in other accounts. So wait a
say this
second. I don't
again.
understand
I
this
got
one. Yeah.
options and futures.
Explain.
So you have to set all your trades when markets are closed.
You can't
Okay.
control your entry.
Exactly.
basically.
Exactly.
Or I can still put during market hours limits and
Yes.
stops and delta hedge and position
Yes.
size.
But
No,
you just can't do brackets.
I'd rather give up the brackets on this one.
Yeah, I'd give up the bracket.
I'm in front of the markets. I mean, if I'm in front of the markets, there's so many things I can do about getting filled, hedging, and all that kind of stuff. I don't necessarily.
Well,
Cody,
that's you though. But
these
brackets
questions
is
are like,
important.
would you rather have $10,000 or would you rather have $5,000? Go.
Okay, good. Is that it?
Let's see.
I got one.
All right, what do you got?
Would you rather give up the ability to trade futures and Forex or give up the ability to trade stock options?
I'd give up the futures market. Personally, I trade so many options. I love the volatility, the theta, the vega, the gamma, the delta. I like the complexity of that. So for me, the way I trade, I would give up the futures and Forex
trade
markets.
Everything in futures.
I know.
Directional cash flow.
I love equity
everything.
options.
Am I allowed to trade options on futures still?
Yeah. No, oh no, you still have
Okay,
options
then
on
I would
futures.
give up options.
I just said equity. I just said equity options.
Okay, yeah, I would give up equity options.
You can trade equity.
Plus
You just
covered
can't trade
call.
equity options.
I mean, you got to buy stock at some point, right? With your
I agree.
I love
agree.
my spreads on the futures market. I love my spreads on oil. Like I love those. That's my cash flow.
Yeah.
Mark, what about you?
What's the choice here?
No choice for Mark. He checked out on that question.
Yeah.
I'd rather have $10,000.
I got a couple line hold 10 years. All right.
Okay.
Just
10 years?
different companies. 10 years.
Okay.
Apple or Microsoft? Blind hold.
So that one actually makes me think.
Two great companies.
Very good companies.
Two great companies. I'll go first. I'm going to say Microsoft. I like the company a little bit more. I think Apple's got a little. I don't like Apple's business model as much as I like Microsoft's. Apple has become a marketing company that doesn't even develop their own products, and in my opinion, their products are not as good as some of the other products on the open market. Even though I use Apple, right? I'm used to Apple. I like them, but I do like Microsoft a little bit more. So I'm going to hedge Microsoft.
This is a tough one, Cody. I do like this one quite a bit. I mean, Apple's cash on hand allows them to do so many things in the marketplace. There's no doubt about it. They've got a big judgment coming out of the EU here soon, and they've got some complexity with the international stuff. I think this
much more prone to the Chinese-U.S. trade war.
Microsoft is consistently profitable. They've got a decent PE ratio. They've got good products on, and Matt, they have so much of their SaaS product or gaming or the Xbox stuff or whatever it is. There's software.
I just want to show you Microsoft's trend over the last 10 years.
It's a really tough one. I'm going to say Microsoft as well, Cody.
All right.
I'll show you Apple's trend over the last 10 years.
Because Apple's a consumer product company. If we go through stagflation and some problems, I mean, at the end of the day, how many people can afford a $1,200?
And let's not act like Microsoft doesn't have billions in cash too.
I agree.
Microsoft was just releasing their like new book thing today, where it's basically two iPads together.
Well, both these two companies have made their investors a tremendous amount of money over the last 10 years.
We've got Bob trolling me in the chat, by the way. He said
GE.
Yeah, that's good. But Apple's got lots more volatility. I remember even in 2013, Apple got cut in half, guys. I mean, got cut in half. In 2015, lost 33% valuation. The one-day bear market in 2018, Apple went from 233 down to 141. I mean, just got absolutely just butchered. And then there's this Microsoft that just trucks. I mean, it just doesn't stop. So
the correct answer there is I refuse to buy either company at the top of its chart while we're heading into a recession.
Well, that's
you don't get a choice, Mark.
Mark does not like this.
I reject your binary arbitrary question.
Mark doesn't.
I'm going to reject you from this room.
Oh wow.
Oh wow, that was. I know you are, but what am I?
I wish we had audio drops because I would love the sound of a stop loss.
You are.
Yes, and Julia, thank you so much. Microsoft also passed antitrust, all that stuff. I agree. And by the way, Julia, you were in my mind when I said Microsoft.
Yeah.
All right, I got two more for you. The last one really is a softball. It's just a good one to end on. But right now, would you rather be a jack of all trading strategies or master of one?
Master of one.
Jack of, I mean, you're really good at all of them. You understand them.
Master of one.
All right,
Master of
over
one.
explainer. We got the question. Everybody would want to be a master of something.
Master of one.
That's
Master of
right.
one. I think one of the
Hey,
biggest problems
I would take a
is
diversified master.
There's
jack
nothing
of
wrong
all.
with being the jack of all trades.
Well,
I mean, the jack of all trades can make money. So
Yeah.
Yeah, but if you master
Yeah.
one, you're set.
I know.
Yeah, if you just master one, you're set. I agree with that. But
If you become a great covered
also
call
gotta
boomerang
realize-
trader, you're set. If you become a great
Yep.
I buy breakouts on this signal directionally,
You're
you're set.
good.
I mean, you
you
master
find
one
your
thing.
edge. You
Yeah,
find
you
your
find
edge.
your edge, you're set.
Oh,
Well,
don't get me
and
wrong.
also
I
very
understand
quickly-
the master of all or the master of one but I also like the idea of being able
As
to
an
see
educator,
something
though, Cody,
All right,
add
that's see that question will trigger a soapbox from educators, because as an educator, one of the biggest frustrations we have with students is that they try to be the master of everything. They try
Oh
to be
yeah,
the jack
don't
of
get me
all
wrong.
trades.
Everyone
And
should
Cody's
be
wife's
just
gonna be
one.
like, what do you mean?
Oh,
Cody's wife's gonna be, what do you mean you want to have a lot of variety in your life? What, you don't want one good thing, you know?
I've got
Hey,
one
now.
for you guys, actually market related here as well.
okay.
You only have 1 minute to analyze the market, and you've got to make a decision based on what you see before you leave and get on an airplane, or maybe your plane's taking off or something.
Are you talking about your crude oil trade still?
Yeah,
Oh,
you
no.
don't do bull puts at the top of the
No,
range.
here's the thing. You haven't seen it yet that day. You have 1 minute. You can either look at a heat map or a chart on the S&P.
They both tell me the same thing.
But you only get one.
S&P.
S&P.
You take the chart.
I can't see support and resistance and moving
S&P.
averages and trend lines on a heat map.
Heat
Yeah.
maps are
You can see-
great. Don't
You
get
can see
me
what the
wrong.
market's doing.
Yeah,
But
yeah.
it's like today, if you did that today, you go look at a heat map, it's like, oh, everything's bad. You go look at a chart, you're like, oh, support hasn't broken. You know,
I don't know.
like it's
that
still
heat-
within its range.
Look at the heat map.
Yeah, I mean,
The
Oh,
heat map-
and what does the heat map do? It scares
it-
the hell out of you.
the
I
heat
like
map
it.
tells us that the market came down today. That's what the heat map tells
But
us.
it doesn't
But
tell us what it came down to in context of other.
I will tell you, Johnson up 1%.
Hey,
Relative.
Cody, what is
Charter up
that? Like, I
1.5.
I never followed through on that asbestos story that broke and that you had some knowledge on from, what was it, 5-6 weeks ago? Whatever came about that lawsuit story on
still
Johnson.
ongoing. I'm not gonna get into a rant on it, but it's still ongoing. There's still different people, litigation, investigations, one way or the other. Is their fault? Are they gonna settle? Just ongoing right now.
Yeah.
Hasn't finished. All right, I'm gonna pitch my last would you rather softball, which
Okay.
should lead into one of you guys closing us out. Is would you rather only be allowed to trade what CNBC is talking about, or
Okay.
only be able to trade stocks that Tackle Trading puts on our reports? There's your softball. to
Would
end
you
it.
rather have 20,000 or
Would you rather have 1
2,000?
million or yeah? Obviously, the tackle scouting reports.
Yeah, the tackle 25, the tackle scouting reports, the different watch lists we build. I mean, a lot of that value is built there on a daily and weekly basis. So
Are
people
we
can
going to
go-
ever have credibility in the news in our lifetime ever again? Or is it just over?
No, it's over.
Like have the MSNBCs and Fox News and CNNs and all
I
of
don't
these.
watch. When's the last time you guys watched CNBC besides like on an airplane?
Talk
Like-
about Cody trying to throw a softball for Tim to pitch tackle trading, and Mark's like, "Let's talk about the fake news."
Listen,
that was so old man Mark on his
Dude, I'm an old
horse.
man with my
That was
iced
so old
caramel
man on it.
macchiato.
I don't care about any. I don't care about money. Let's just
I
talk
just-
about fake news.
I
Yeah.
don't care what stock is hot right now. I don't care if it's Bitcoin,
Yeah.
Beyond Meat. I don't care one iota.
And he did know he didn't mention Fox News. He only mentioned MSNBC.
I mentioned Fox News. Listen, I'm a Fox News watcher outside.
I watched CNN and Fox News. I
during
watch
the
them both.
day. I'm a Fox
Yeah.
News during the day.
Not at night.
I don't watch any of the.
No, anything.
I don't watch Rachel Maddow. I don't watch Sean Hannity. All of the
Mark,
partisan programming.
The probability of you watching Rachel Maddow was not listed.
Yeah.
We don't need to know that. It wasn't
She's
listed.
very smart, by the way. I don't care if you're right, left, or center.
She-
She is very
No,
smart.
I'm not. I'm putting a stop loss on this
All right,
immediately.
all right, all right, all right.
Immediately.
Guys, go sign up for Tackle Trading. If you're not, if you're new to our channel, always subscribe and click the bell and join us on a daily basis. If you're coming back and you're a veteran, come see us tomorrow. We'll be here tomorrow, same time, doing the same kind of stuff each and every day on our halftime report. Cody, I like the game here today. I'm going to have to teach you how to play Locked In. It's a better version of that game, by the way.
Locked In's fun.
Yep, it is. It's what me and my kids play, and we play on the podcast.
Well, we played on podcasts.
Yep.
Like, okay, so Cody, the only variation it was, would you rather buy Apple or buy Microsoft? And then I would pick, and then Mark and Tim would have to pick what I would say.
He wouldn't tell us.
And then they would.
Okay, so there's another degree of.
Yeah,
it's another layer.
Gotcha. I got you.
Always another layer, like the halftime report and then the pro membership. That's our other layer. Go and join the pro membership, like our channel. Thumbs up, guys. We're out
Team
here.
Tackle.
Hey, great job, Matt. Great job, Mark. Great job, Cody. We'll see you guys tomorrow.